Hey everyone, and welcome back to the channel where we demystify the markets and shine a light on unique trading situations. Today, we're diving deep into a fascinating case from the medical diagnostics sector, BJDX Inc., ticker symbol BJDX. This stock has hit our screener for its exceptionally high cost to borrow, making it a prime candidate for detailed educational breakdown. We're going to walk through what makes BJDX stand out, explain what hard to borrow truly means, and dissect the mechanics of a potential short squeeze. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on BJDX Inc., or BJDX. True chart, BJDX ticker, company name sector. This company operates in the crucial healthcare sector, specifically focusing on medical devices with its Symphony technology platform designed for protein detection. Currently, BJDX has a microcap market capitalization of just $1.02 million, indicating a very small company. When we look at its recent price action, it's been a rollercoaster. Today, BJDX is down 7.26%, but looking back just 5 days, it saw a significant gain of 33.72%. However, over the last 30 days, the stock has plummeted by 65.26%. Highlight recent price action numbers on chart. Volume today stands at 3,156,200 shares, which is quite a bit lower than its 30-day average volume of 9,560,296 shares, giving us a relative volume of only 0.3x. What is cost to borrow and why it matters? So, what exactly is cost to borrow or CTB, and why is it so important when we talk about short squeezes? Simply put, the cost to borrow is the annualized interest rate that short sellers pay to borrow shares from a broker. Think of it like renting a car, you pay a daily or annual fee to use it. Short sellers borrow shares, sell them, hoping the price goes down so they can buy them back cheaper, return them to the lender, and pocket the difference. But they have to pay a fee for the privilege of holding that borrow position. When demand to short a stock is high, and the supply of shares available to borrow is low, this fee can skyrocket. It's not uncommon to see CTB fees exceed 100% annually in extremely tight situations. This high fee directly eats into a short seller's potential profits, increasing their risk significantly. Why this stock is hard to borrow right now. Now, let's talk about BJDX specifically. BJDX has appeared on our hard to borrow screener for a very compelling reason. Its annualized cost to borrow fee is an astonishing 745.4%. Highlight 745.4% CTB. This is an extremely high number, signaling immense demand to short the stock coupled with a very limited supply of shares available to borrow. Our data shows BJDX has an estimated float of just 0.9 million shares. The small float means fewer shares are actively traded, making it easier for borrowing demand to overwhelm supply. While we don't have current data on the momentum of the CTB or the exact number of shares available to borrow right now, a 745.4% fee tells us that shorting BJDX is not only expensive but also difficult. It implies that brokers are finding it very challenging to locate shares for their clients to borrow. Squeeze mechanics explained. So, if a stock like BJDX is hard to borrow and the CTB is sky high, how does that lead to a short squeeze? Short animation of short squeeze process. Imagine a scenario. Short sellers have borrowed many of those 0.9 million BJDX shares and sold them, betting on the price to fall further. But if some positive news emerges, or just buying pressure starts to build, the stock price begins to rise. As the price goes up, short sellers start losing money on their positions. More critically, as the price rises and shares become even harder to find, those exorbitant 745.4% borrowing fees become unbearable. This forces short sellers to cover their positions, meaning they have to buy back the shares they originally sold. But here's the kicker, when they all rush to buy back shares at the same time, it creates a massive surge in demand, driving the price up even faster. This frantic buying by short sellers to cut their losses is precisely what a short squeeze is. It's a feedback loop that can send a stock parabolic in a very short period. Dilution risk check. A critical step in evaluating any potential short squeeze candidate is to check for dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can be disastrous for a short squeeze thesis because if the company simply prints and sells more shares into the market, it provides an easy supply for short sellers to cover their positions, alleviating the pressure that drives a squeeze. New shares also dilute the value of existing shares, which can negate any upward price movement. For BJDX, we performed a thorough check for recent dilutive SEC filings like SMINUS1s, SMINUS3s, or 424BS within the last 90 days, and we found no such filings. This is a positive sign, as it suggests that the company hasn't recently flooded the market with new shares that could undermine a squeeze. We also found no recent reverse splits for BJDX in our look-back window. Another good sign, as reverse splits can sometimes precede new dilution. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, with BJDX showing an incredible 745.4% cost to borrow and a tight float of 0.9 million shares, it certainly has some of the key ingredients for a short squeeze. Our internal composite squeeze score for BJDX currently stands at 40.5 out of 100. This score reflects a moderate potential, combining the high CTB, small float, and other factors like volume and technical setup. However, it's vital to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay those exorbitant fees because they truly believe the stock will go down significantly. Given the recent negative 30-day performance and today's low relative volume, it's clear that conviction from both sides is battling out. For BJDX, you'd want to watch for a sustained increase in trading volume, especially on upward price movements, and a continued shrinking of shares available to borrow. BJDX Inc. presents a fascinating case study in the world of hard-to-borrow stocks. With its extraordinary 745.4% cost to borrow and a tiny float, it definitely has the attention of those interested in short squeeze dynamics. Remember, understanding these mechanics is crucial for informed decision-making, but always approach such situations with caution and thorough research. If you found this breakdown of BJDX helpful, please give us a like, subscribe for more in-depth analyses, and let us know in the comments what other stocks you'd like us to cover. Until next time, stay safe out there and happy trading.